Adobe is down 20% year to date, and worse, down 30% looking back 5 years, while the S&P SPY has gone up 81% in the same time frame. So Adobe investors has been getting hammered. Let's try to find out if Adobe is trading at a discount today. So what is Adobe? Adobe is a SaaS company offering creation, editing, publishing, and analytics solutions. Their main products are the Creative Cloud, which includes Photoshop for photo editing, Illustrator for vector graphics and logos, Premiere Pro for video editing, After Effects like motion graphics and visual effects. They also offer Document Cloud with their Adobe Acrobat and PDF solution for writing, editing, and signing PDFs. Adobe also owns Marketo, a marketing automation company which helps bolster Adobe's B2B marketing and to compete with Salesforce and Oracle. Adobe acquired Marketo in 2018, and Marketo generated $321 million in revenue in 2018. So Adobe has a pretty good environment. If you're a business, you can use Photoshop to create ads, then use Acrobat to create and sign contracts, and then use Marketo to automate your company's ad outreach. If you were to look at Adobe's top line on the surface, you'd think that Adobe was not under threat. Look at this nice, steady increase in subscription revenue quarter after quarter. Notice how this is not looking seasonal, no ebbs and flows. Once users subscribe, they seem to stay. We can even add cost of revenue, and we see costs stay relatively flat. $642 million in the most recent quarter compared to $572 million back in June 2023. This is a 12% increase. The revenue in the same period grew 22% from $4.8 billion to $5.9 billion. So Adobe has been able to generate more revenue with less cost. This is a great trend to see. Gross profit is also a nice trend to the upside since 2016. The gross profit growth from June 2023 to today is 26%, from $4.2 billion to $5.3 billion. And ChatGPT and Gemini have already existed since 2021. So this 26% growth in quarterly gross profit has occurred during the AI hype and potential AI threat has against this software company. So we have a stock that is down 30% in the past 5 years, but the quarterly revenue is up 90% from $3 billion to $5.9 billion. I enjoy analyzing stocks, but getting historic financial statement data is a manual, time-consuming process. That is why I created Udomo, a financial statement API and dashboard solution at udomo.com to easily gather historic balance sheets, income statements, and cash flows for your favorite stocks. Use our API with your favorite analysis tools like Python and Excel to directly download fresh data, or use the Udomo Atlas, our web-based dashboard, to visualize multiple line items at once. Sign up is free. Check out udomo.com. Adobe is currently trading at the cheapest price to sales it has since 2016. They produced the most revenue ever last quarter at $5.9 billion. Adobe's current price to sales is at 24, while Adobe's historic average is double at 45. This means historically, on average, investors were willing to pay $45 for every dollar in revenue the company generates. Now, however, investors have so much negative sentiment around this company that they are now only willing to pay $24 for every dollar in revenue Adobe generates. And remember, last quarter, Adobe generated nearly $6 billion in revenue. When Adobe was trading at a price to sales premium at 76, Adobe was only generating $3.6 billion, half of what Adobe's doing today. All because of the potential threat posed by AI and competitors, even while revenue and gross profit continued to climb to the upside. Story is the same from a price to free cash flow perspective. I took Adobe's quarterly net cash provided by operating activities, subtracted out purchases of property and equipment for our CapEx. We also minused out the previous quarter's free cash flow to convert year-to-date free cash flow into quarterly. I conclude Adobe's free cash flow at about $9 billion for the most recent quarter. The most recent free cash flow with this arithmetic, this means Adobe right now trades at a 16 price to free cash flow. Adobe historically on average traded at 47. So investors in the past were willing to pay $47 for every dollar in free cash flow Adobe generated. But now the AI and competition sentiment is so negative that investors are only willing to pay $16 for every dollar in free cash flow generated. It is not to say that the competition and AI threats are not valid concerns for Adobe. So why is Adobe trading at a discount? Because of these new competition and AI threats. Canva is a web-based editing software enabling users to create and edit photos and videos wherever they'd like. Unlike classic Adobe, where you must download software onto your computer, Canva is all web-based, no download necessary, creating a lightweight experience. The learning curve also between Canva and Adobe is lighter and user-friendly for beginners. AI is potentially a threat or an elevator for Adobe, and the market's trying to figure out which. Instead of manually photoshopping and editing videos, you can now ask AI to generate photos and videos on the fly. But Adobe has been leaning into AI, adding these generation features right into Adobe. We could argue that this AI inclusion into the platform can empower creators to generate faster while still providing editors control with traditional Adobe tools. Haven't you generated AI photos and wished, oh man, I wish I could crop that out, or AI could have blended this better, I wish I had a blending tool to edge this a bit better, or I'd love to expand on this image. Thanks to Adobe, users can generate photos and videos and then immediately start editing on them, all within the same environment, creating a strong ecosystem of products. Overall, I believe Adobe is a dislocated stock. From the price and the fundamentals, there's a dislocation. Both the revenue and the gross profit has been increasing quarter after quarter. We can easily see this revenue growth in the Udomo Atlas. I believe Adobe is a dislocated stock. Both the revenue and gross profit has been increasing quarter after quarter. We can easily see this revenue growth in the Udomo Atlas. Adobe also had a great quarter 3, generating $10.5 billion in net income, the highest net income quarter in the past 4 years. All the while, ChatGPT appeared on the market in 2021. The introduction of AI and its presence in the past 4 years has not dented Adobe's top and bottom lines, at least for now. Thank you for watching Udomo analysis on Adobe. If you enjoyed this type of stock analysis, I appreciate you for liking and subscribing so that YouTube knows you enjoy this type of content. Check out udomo.com to easily visualize financial statements for your favorite stocks and use our API to download balance sheets, cash flows, and income statements directly into Python and Excel.